Joining us right now is another hotly anticipated guest, Allianz and Gramercy advisor Mohamed El-Erian, who also happens to be the president of Queen's College, Cambridge. Mohamed, let's talk about what Mike was just mentioning, the somewhat indecisive rally. He's right. You have to squint to see it because the Journal also points out that this is the everything rally. You've got everything from lumber prices to stock markets around the globe to Bitcoin, all sorts of different asset classes that have really been skyrocketing. What do you take away from that? What do you think?
So I think it is the everything rally. I think it reflects the impact of continued massive liquidity and a significant pickup in economic recovery. So you have both things coming together. And as long as we don't get either a policy mistake or some sort of market dislocation, these two things should keep the markets going. But I want to stress that we have a lot of tests coming up in the next few months.
You mentioned this week, you have an op-ed out this morning in which you say the Fed is probably not going to do anything this week, but you think that's bad news. I mean, usually we look at it when the Fed doesn't do anything and the markets say, fantastic, great news. What concerns you here about them not doing anything?
So remember, we start with the paradigm that the Fed is not thinking about tapering, right? And it will once again revise up its economic outlook, having made major growth revision just a month ago, is going to revise it up again. I think it's going to ignore the inflationary pressure building up. It's going to ignore the pockets of market excesses and simply try to keep things as is. They want an uneventful, they want a snooze fest, they want a no drama meeting. And I suspect, Becky, they will get it. And then we'll all turn our attention to June and start asking the question, what if the Fed falls behind? And one of the problems with this outcome-based approach that the Fed is taking is that the risk of falling behind is high, and then you have to slam on the brakes. And that's the one thing that can really disrupt the markets, if we get them slamming the brakes. So I would rather see them slowly tap the brakes now than have a very high risk of them slamming the brakes down the road.
I almost wonder how they could possibly pull that off, Mohamed, because even if they were to say something or indicate something, let's just say they point to inflation and how it's been growing. We get inflation numbers on Friday again, right after the Fed meeting. But if they were to start saying we're thinking about tapering, what would the market's reaction be? I don't know how the market ever is able to take hints at something instead of getting smacked over the head.
So, Becky, the question is, what's the alternative? And we saw last week the Bank of Canada start tapering. And we also saw the market shrug off correctly the news on the capital gains tax. Yes, there was, a moment of a momentary sell-off, but we shrugged it off. So I would rather that this reaction comes sooner than later. I'm really worried that what they hope is transitory inflation is going to end up being persistent inflation. And if we end up in a persistent inflation world, they're going to have to slam on the brakes. And the market reaction then will be much worse than what it would be if they just tapered a little bit now.
What for you would be the definition of persistent inflation? How long would you have to see things kind of spiking higher, and by how much?
It comes down by the source of inflation. So base effects, I dismiss. The fact that demand is outpacing supply, I dismiss. But we're starting to see the supply side inflict more inflationary pressure. We're seeing it in agriculture product. We're seeing it in industrial product. We're starting to see it even in bits of the labor market. We see it in semiconductor. Mm-hmm. The list is getting longer and longer. So the concern is that the inflation comes from the supply side that then leads not to a once and then back, but to an inflationary process. And if you're not careful, that's going to be much harder to control down the road. And that means, in terms of numbers, inflation is anywhere between 2.5 to 3.5 for a while.
Shepard Smith here. Thanks for watching CNBC on YouTube.